Welcome to Idea to IPO. My name is Rob. I organize Idea to IPO. We've been holding events in Silicon Valley for many years. We launched officially on February 1st, 2010. At that time, we had no members and no events on our calendar. At this stage, we have over 1 million members among all our meetup groups all around the world. We've organized, promoted, and produced over 5,400 events. By any standard, by any measure, we're the most active, most prolific startup event organization in the history of Silicon Valley, or none. Thank you. Thank you for all your support. We organize venture capital panels, legal workshops, networking events, and more. We hold an event every day of the week. Check out our schedule at ideatoipo.com. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant. Stuff you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is a global aspirational ecosystem. It attracts people from all over the world who come here to do great things. Who here is not originally from Silicon Valley or the greater San Francisco Bay Area? Who here was born and raised in Silicon Valley or the greater San Francisco Bay Area? All 6 of you, well, welcome. So whether you were born and raised here or just arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network. With regard to value, it's important that we provide value at each and every one of our events. Not just value for your money, which is important though, because we know many entrepreneurs are struggling financially. So we make sure our events are free or affordable. And if one of our events has a cover charge and you cannot afford the cover charge for whatever reason, come talk to me and we can work something out. And at most of our in-person speaker events, we make sure that we provide a delicious buffet. Is that a delicious buffet? Oh, come on, is that a delicious buffet? I want to thank Snell and Wilmer for sponsoring that delicious buffet. So let's hear it for Snell and Wilmer. More importantly, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Besides this young lady and that young man and our panel? So when you invest your valuable time to come to our events, we want to make sure that you maximize your ROI. We have many partners that help us do what we do. Law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in the Silicon Valley startup ecosystem. Tonight, we're grateful to Snell and Wilmer for hosting us once again at this beautiful venue. Is this beautiful venue? We've held many events here, and we look forward to many more. Eli, would you like to say a few words? A few.
Hello. Okay. Thank you, everybody, for coming here. My name is Eli Mansour. I'm a partner with Snell and Wilmer. I'm not the partner that was originally supposed to be here. You may have heard the name Roger Rappaport. I work with Roger. Roger, unfortunately, couldn't make it. I'm his tech transactions partner, so I'm not a venture attorney. I'm the guy that writes the contracts that help you make money and monetize your business. So as I talked to some of the panelists earlier, my questions are going to be like, I've got the list that Rob gave us, but we're going to ignore it, right? No, just kidding. But I'm going to ask questions that I'm really genuinely interested in because this is a very interesting topic, obviously. So really quick about Snell and Wilmer, we're a law firm, national law firm with about 16 offices and I think over 500 lawyers, full service, and we also have a Silicon Valley office upstairs in this building on the 6th floor. Come by and say hello, and I'll turn it back to Rob.
Thank you, Eli. Applause for Snell and Wilmer. Some of our other partners are here tonight. I would like to also have them say a few words. Let's hear it for Johanna and Enviri. Applause.
Good evening, everyone. Yeah, so I'm the founder of a company called Envire. And briefly, how many of you enjoy attending conferences, maybe live music concerts? Maybe some of you saw the Coldplay concert some time ago. A few 100 million people did.
Yes.
But shortly explained, these live events that we all love attending, they are actually responsible for 10% of global carbon emissions. I know this firsthand because I planned these events globally. So what I did, I started Envire. We help make the invisible visible because most of the event-related emissions are actually not where we can see them. They happen behind the curtains. So we need a systems engineering approach, including smart energy management for the buildings and managing the procurement systems, managing anything that goes into city also goes into putting together a global conference. So that's what we do. Also, I want to give shout out to Rob, who did extensive efforts to make his event sustainable. So you probably saw those reusable plates and cups that we all use here. So food waste at smaller events can account up to 30% of the emissions, and that includes the single-use footwear, especially the single-use footwear. So we can cut a lot of emissions by just this simple act. So I kindly ask that please return the plates to the collection stations and also wash them away from the food waste and try to keep your cup. So these are like really simple items. It also makes the experience nicer for everybody. And if you're interested in trying this out for your own events, you can also come talk to Rob or myself.
Actually, I also want to add that someone's got to wash those dishes, and I want to thank Snell and Wilmer for allowing us to use their dishwasher. They've provided us with a dishwasher, a machine, not a human being.
Okay, good.
But again, thanks again for Snell and Wilmer for supporting our sustainability efforts. Next up, we have Yana from New York Life. Applause.
Thank you, everyone. My name is Yana Vasileva, and I'm a financial professional with New York Life. I do help with financial planning. I support individuals, businesses, and startups. So if you're getting funded tonight, you do need life insurance. So please come see me at my table. Let's connect. And please, if you haven't already done the raffle, enter your raffle and have fun tonight. Thank you.
Next up, we have Melissa from Autodon. Applause.
Hi, guys. My name's Melissa. I'm with Autodon Technologies. We help enterprises accelerate AI initiatives with our agent-based platforms. We do everything that has to do with tech. We also able to partner and collaborate with. So maybe if you're not ready now, I would love to still get connected and build those relationships. Enter the raffle. We've got some really cool prizes, a book, and a $25 Visa gift card here too.
All right. Next up, we have Hattie from IntelliPro. Applause.
Thank you. So this is Hattie wearing a hat. So I'm from IntelliPro, the fastest and largest human resources and recruiting company right here in Silicon Valley. So if you have any question around talents, recruiting, payroll benefits, fundings, come speak to me. Thank you.
Next up, we have Jimena from Menlo College. Applause.
Hi, I'm Jimena. I would like to invite you to the Finance Hybrid Conference and to join Menlo College and other students, as well as a lot of experts who are going to be talking about the blend between real estate, biotech, and finance, fintech overall. If you're interested in attending and in more information, please reach out to me after the conference. And you can also reach out to my mentor, Professor Fatten.
So though our local mission is to support entrepreneurs here in Silicon Valley, our global mission is to democratize entrepreneurship, and innovation all around the world. To that end, we maintain a robust YouTube channel, youtube.com/idea to IPO. Check it out. We have tons of videos there. And this rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Our partner in this endeavor is Michael Payne, one of the top professional videographers in Silicon Valley. Let's hear from Michael. Applause.
Hello, everyone. Imagine you're looking for a company to partner with or to buy from. Would you be more interested in talking to them or their customers? Right? I help you do that. One of the things I do is create customer stories for companies. It allows people to talk to your customers so they can better know what you do and authentically know what you do well. Because people don't care what you say. They care about what your customers say. I also do all sorts of other videos, event videos, training videos, etc. And if you have any idea that I can help you, please reach out. Thank you.
All right, so let's see who's in the room tonight. Who is an early stage entrepreneur? What's the difference between a pizza and an early stage entrepreneur? A pizza can feed a family of 4. Who's an investor? Right. Who's an enterprise employee? Who's a government employee? Who's a former government employee? Who's a student or an academic? Who's a journalist or a media person? Who's here for the delicious buffet? Well, thank you for coming. Appreciate your presence tonight. So here's the schedule for the rest of the evening. Our panel will hold a brilliant, compelling, dynamic, entertaining, and scintillating discussion. Right? At 8 p.m., we'll open it up to questions from the audience. At 8:30 p.m., we'll end the program. We will do our raffle drawing. You must be present to win. You can stick around, network, socialize, connect. There will be an after party. More on that later. So without further ado, I'm going to hand it off to our distinguished moderator, Eli Mansour, partner at Snell and Wilmer. So let's give it up for Eli and our panel. Applause.
All right. Thank you very much, Rob. Before we get started, I forgot to mention, everybody should have this on their chair. There's an event next week called, it's a pitch night, seat stage, a founder showcase. Roger is supposed to be moderating it. He may not be able to make it, so I may be moderating it. So if you like what you see tonight, come next week. If you don't like it, then Roger's moderating it. Come anyway. Okay, anyway. All right, so we're going to kick it off, and I want to just go down to each of the panelists and ask them to introduce themselves, briefly tell us about their background and kind of their general, investing strategy and what they're looking for these days.
Hey, everyone. Thanks for making it out tonight. My name is Ajay Ramachandran, and I am an early-stage investor with a focus on primarily AI and deep tech, but occasionally other spaces, robotics, fintech, enterprise software, and other things. I love the early stage stuff, so typically seed and late seed, but occasionally earlier.
Hello, everyone. My name is Ben Haskell. I'm a corporate venture capitalist working for Lam Research Corporation in the Lam Capital Group. I was one of those 6 people who raised their hand being native to this area. Grew up about 5 miles from here and learned to drive in the VC parking lots on Sand Hill Road. Lam Research, for those of you that don't know, is one of the largest semiconductor wafer fabrication equipment companies in the world. We make the tools that enable the ever denser chips that TSMC builds for NVIDIA and for Apple and such. As an investor, we're very strategic, so we're looking for companies that are developing technology that could feed into our current and future products and services and our means of delivering those products. We invest typically $1 million to $5 million in seed through Series B companies. And we often try to build strong relationships with the founding teams. We like to speak regularly with the executives and try to find ways for Lam to help those startup companies succeed.
Hello, everyone. My name is Anshu Agarwal. I am an early stage investor at a venture firm named Converge VC. It is a Boston-based firm. I'm the only West Coast partner here. I became a VC 2 years ago. So you can call me a very early stage VC. But I've been an operator all my career. I've been part of 5 startup journeys, all 5 acquired by big tech in the Valley. Akamai, Juniper, HP, Citrix, and last one was DigitalOcean. I founded the company that got acquired, paid my dues to DigitalOcean, and the firm that had funded me in my journey is the one I joined because I like the way they work with the founders. So that's my story. I want to be an investor with what like my investor was to me, to the founders, because having gone through 5 M&As, have seen good, bad, ugly of all the investing and investors and the way things are dealt. So that's what we are, early stage. So we go pretty early, pre-seed, seed, and early Series A. But these days all Series A are so big, so we don't really do Series A unless we are in pre-seed or seed. Invest in AI infrastructure, AI native application layer, and robotics.
Hi, everyone. My name is Ryan Taylor. I'm with Fusion Fund, an early stage fund, pre-seed to Series A, $1 to $5 million checks. We invest in 3 core verticals: enterprise AI, that's everything from B2B applications all the way down to the semiconductor layer. We do industrial automation, anything that makes traditional business, that's space, robotics. And then lastly, we do health, digital therapy, AI-powered drug discovery. That's deep operational and technical experience. Myself started my career on Capitol Hill, quickly realized technology is where all the exciting stuff was happening, and transitioned, built my own B2B SaaS company in the entertainment space, and then later joined JustWorks out of New York, helping them scale from sub 10 to $500 million in ARR before joining Fusion Fund. Excited to be here.
My name is Sanjeet Singh Dang. I am the co-founder and chairman of UFirst Capital. At UFirst Capital, we invest in early and growth as well. We have invested in companies like Anthropic, xAI, which is Elon Musk's AI competitor, Perplexity, Grok, and a whole bunch of early stage companies like DevRev, Wisdom AI, etc. We have invested in over 40 companies in the last roughly 4 years. And we look for good early stage entrepreneurs. The areas of interest typically are AI, cybersecurity, enterprise software, and deep tech. Before UFirst Capital, I used to be at Intel Capital and spent time there investing in a bunch of areas, cloud, infrastructure, big data, etc. By way of education, I have a PhD in chemical engineering, and back in the day, and used to be in semiconductors early on in my career. Been in the Valley for 25 years. So I love working with founders, learning from founders all the time.
And my name is Bill Reichert, and I'm a general partner at Pegasus Tech Ventures. Pegasus is a global venture capital firm. We have offices around the world and about $2 billion of assets under management. Our headquarters is here, and our focus is pretty much on everything. So there's almost nothing we don't look at, because our limited partners are multinational corporations from around the world who ask us to find emerging technologies that are of strategic value to them. So we're looking at things that start from the inside of the cell to outer space and everything in between in terms of life sciences and material sciences and clean tech and fintech and auto tech and reg tech and, you name it. So I started out here in the Valley, down the street at Stanford. As a student, I started my first software company. I became a serial entrepreneur, took 2 of my companies public, and then crossed over, became a VC. I've been a VC for many years now, having invested in lots of different companies, having seen many different waves. both as an entrepreneur and as a VC, and maybe we'll be talking about some of that during the panel discussion. Thank you so much, everyone.
Thank you very much, panel. I'd like to kick it off with a very simple question, because everybody here, or not everybody, but a lot of people here are startup folks, and they want to know, like, what's hot right now? Like, what do you guys look for? What do you think is the in thing that everybody, should get into right now?
Everybody knows what's hot, but that's not the right question. So I'm going to push back on Rob now. It doesn't matter what's hot. It doesn't even matter what's not, because venture capital is not a short-term investment business. We're long-term investors. And so what you care about is what is going to be sustainable over a long period of time, what makes for a good investment. So for the most part, things that are hot are not great investments because they're overpriced.
Yes.
Things that are not hot are not great investments because they're going to crash and burn, because none of the rest of my panelists here are going to invest in them. So the question for, since most people here are entrepreneurs, right? The question is, where do you go to build a long-term, successful, sustainable, profitable business? And, rather than focusing on trying to jump into what's hot now or trying to avoid what's not hot.
That's a really good answer. I like it. So let me follow up with another question. So if the goal then is to build a long-term sustainable business, like, how does one do that? Like, what is a ripe kind of field for building those kinds of businesses right now?
I agree with what Bill had said. In fact, it reminded me, Mark Andreessen famously talks about that the best companies are not the obvious ones. And, there are so many examples, like Uber. In early days, the CEO had a hard time raising funding. Who wanted to invest in a taxi company? There are so many stories of that, including Ram Sriram, my friend. He early investor in Google. Uber was presented to him as an angel deal. He's like, well, what is this? No, sorry. So the best companies are never the obvious ones. But how do you build sustainable? Venture capital is a people's business. It's about investing in people, right? So part of the diligence that what we do is, we really spend a lot of time with the entrepreneur to try to understand what his or her strengths are, weaknesses are. Do they understand the problem statement deeply? No, I shut down the project because I'm not a fan of canned salesy pitches, because typically somebody has built that for the founder and you're just presenting it, and that's not what I want. So I do a whiteboard session typically. Okay, let's have a conversation to understand what is in your mind, right? Do you really understand the pain point? Have you gone through it deeply? Just using buzzwords like agentic AI and I'm building an infrastructure that will sell to CIOs, that means nothing. So how do you build sustainable businesses? You really try to understand whether, this is the right person, this is the right horse, this is the right jockey or not. And then you also try to understand if this is a sector that can become an expanding market. It may be big today to start with, but can it get to an even much bigger level? And as the startup grows, they expand the market. Does this startup have that capability? Does this entrepreneur have that capability to create an expanding market? So that's where we look for, and that's what we look for. The other thing we also look for is, why now? Startups have to have success in a finite time frame. Let's say I build a company today, I raise seed funding. My clock is ticking for Series A in 1 year, maybe 2 years maximum, which means I have to show progress and I have to meet Series A metrics within that time frame. If the market is not ready in the next 1 to 2 years, for me, I'm too early or I'm too late. It's like there is a theory out there, and some people do subscribe to it. It's too late to create a Gen AI company already. If you're starting today and just following what's happening, it's too late. You got to think beyond the box.
Really insightful.
Yeah, I'd like to add. I think AI is hot. Okay, I do believe AI is one of those big wave that we're going to see. But just adding AI to anything is not the answer. Okay, it has to have long-term sustainability, like Bill mentioned. And it is very important. Just don't create a wrapper. Create something that is defensible. Just seeing early traction is not a sure sign of success. You have to build it. So you might have a wedge today, which is great, but see how you're going to grow into the vision that you have for the company. But AI is definitely hot. I mean, I used to work on speech recognition and in late 1990s. And, I worked at Bell Labs. We weren't making progress. It was not the right time. The compute was insufficient. The data was insufficient. There was not. Compute is great now. Data is so much. There's so much data available. And the whole physical industries, I think the biggest wave or benefit or disruption in AI is yet to come. It will be the disruption of physical industries, manufacturing, construction, name it. AI has the ability to disrupt all of these industries, and we are going to see that. So AI is definitely hot, in my opinion, very hot, but you have to choose wisely what you are building, because your company should have a differentiation. Tech differentiation is hard, but it could be data differentiation. It could be a distribution differentiation. It could be a domain differentiation. Build that, and that's what will be hot.
And I couldn't agree with that more. We see a lot of AI companies right now, and you have to be wary every single time you start building on the application side, because a lot of these labs are, they have to grow into their valuation. And every single time they come up with an update, they're effectively reaching into the application layer and putting a bunch of companies out of business. So how do you make your solution defensible in that space? That means you need to be customizing your solution for your customers, getting their data, making it sticky in that way. We have one company right now that we're looking at, and they're in the voice space for sales, and they're customized specifically to each of their customers. And what's exciting about it, you talk to their customers, they absolutely love them. Their net retention is like 200%, and they're saying, Ryan, like, our productivity increased 400%. I'm like, 40%. And I'm like, 40%, what does that mean? They're like, our revenues actually increased 40%. And so we're seeing massive revenue, massive productivity. And I think what will end up happening is effectively quite a bit of deflation in this space. It's going to be kind of exciting to see how things go on that side.
So I'll answer that in 2 words, hopefully you. What we want to see are charismatic, magnetic founders that can attract customers, raise capital. Ideally, these founders are highly ethical and deep experts in their field, great communicators. So that's kind of that's what's hot, right? Is a great founder. So I would focus on being that founder and build those skills. Those skills will serve you not only in your startup, but in life in general. So do that first, because it's super hard to raise capital. It's super hard to build a business. If you're not coming to the table with a lot of those qualities, or a team at least that has those qualities. And then on the industries or the waves or the trends, I would say I agree AI is still hot, but perhaps more specifically like cognitive AI's theory of mind. That kind of next wave of AI is going to be really interesting, and there are a lot of new developments already happening there, but it's not too late. And perhaps revisiting evolutionary neural nets again, now that agentic AI has become a thing.
I would add that I just want to do a really, really short, quick intervention against, with Ajay's comment. You made the comment that you're looking for entrepreneurs who are charismatic, right? Okay. And I just want, you guys happen to all be charismatic. I'm just sure you are. But I gotta say, I was, you were saying that I was seeing my 3 or 4 top success stories. They were not charismatic. Okay. So just remember, okay, if you're not charismatic, then don't worry. That doesn't disqualify you. Okay. Just say.
He also said magnetic.
Well, I think maybe magnetic's a better word. The point being is you need to be able to raise capital at the end of the day. And so, yeah.
Yeah, you need to
and attract talent.
They'll have some personalities that end up being customer facing. And so, yeah, I think having a charismatic person on your team is probably enough. But Yeah, I would add, of course, agentic AI is huge right now. Photonics for data centers is huge. Quantum computing is really hyped. I wouldn't necessarily start a company in any of those spaces right now because there are so many competitors that it's becoming harder and harder to find white space. So I would say you need to be focusing on what pain points do you see customers having, number one. And number two is how can you create a product that they will pay for to alleviate that pain? And far too many founders I've seen are latched on to some buzzwords or hot areas right now. And they could raise money that way sometimes, but when it actually comes time to generate revenue, it becomes very difficult if you haven't really thought through that product vision and have a clear understanding of how you are able to sustainably solve a customer's or many customers' problems.
Really good. So I want to kind of follow up the whole sustainability issue because we were talking, a couple of us, before the event, and we were talking about how the barrier to entry to get starting an AI business is so low compared to like earlier, like when the last wave, like the .com wave, let's say. I mean, it really was hard to do it because you had to create a website, you had to create like the code. I mean, it took a lot of effort. Like today, it seems like anybody and their mother can start an AI business by just, signing up to a public AI, let's say Source, doing a couple of agents, and then, coming up with a business. So like, how do you create a sustainable business when like anybody can do what you're doing? Like, I mean, unless you're a huge infrastructure company, and you have billions of dollars at your disposal, how does a small startup like create a sustainable AI business in this crazy marketplace?
I personally think that it comes down to domain knowledge. AI is a tool for potentially solving problems, but identifying those problems is where domain experts are really key. So partnering with, if you're the AI expert, partnering with someone in a particular field who understands pain can be a powerful combination.
I agree with that. And just to give an example, a company, CTO was an AI expert, was partnered with someone in the SecGap space. You guys actually might like it. And they built reinforcement learning tools for semiconductor fabs. That was their niche. Not a lot of people have both the AI skills and fab space expertise. And the fabs that they deployed at saw a 10x productivity increase. And it wasn't small fabs. These are like Micron, Global Foundries, big players in this space. And so there's a lot of RL companies, a decent amount of semiconductor companies, not something that can apply both, and productivity gains were substantial. So I think, I think that's a great strategy.
Yeah, I agree. I think for building sustainable business, you have to fall in love with the problem and not the solution, because the solution is going to evolve over time. Today, what you have, you can generate revenue, but it's all short-term revenue, but build over time and keep on addressing the problem. So what we as a company, because we are early stage investor, there's no product market fit when we invest. So what I look for is a product founder fit or a founder market fit. So I know that there is some domain knowledge or something that is very unique to this set of founders, which they bring to the table, which others can't replicate. And that's what is sustainable. You're addressing a problem, which is an aspirin and not a vitamin, which is an aspirin today, and and you're for future protecting it because you think that it's going to be an aspirin in the future, but also not falling in love with your solution and actually growing the solution or pivoting or just iterating out in open. I think that's very important. Don't build the product for 2 years and then release it. No, build the product quickly, release it, get feedback, and keep on building on it. I think you have to have the conviction in the problem.
I think I agree. I think the domain knowledge and having that level of expertise is the key. But I think on top of it, and then I agree with that, actually, you need that as a base. But over time, I have realized there are a lot of good founders, technical founders especially. They're good engineers or they're very good scientists, but they're not good entrepreneurs because they are too grounded in their worlds and they're not looking at either the big picture or the market, and they can't see what's coming next, etc. So I feel the domain knowledge is the building block. On top of it, you need storytellers. Whether it is the same person, CTO, and the same person does both, or CTO, CEO, CTO, CRO, I don't know. It varies depending on company to company. But you do need somebody in the founding team to be able to tell a very compelling story. And the story has to be around the technology stack you are building in that domain, but then also paint a picture of the world with and without your company. What does the world look like if you don't exist? Does anybody care or not? What happens if tomorrow your company goes away, right? So you have to be able to do that. And one of the things I ask founders is, you raise, let's say, $20 million in funding. What are you going to do next? You're going to go recruit. How will you recruit the best engineers, best sales guys? You have to be able to convince them and have them buy into your vision, not what you are today, but where you are headed. So that storytelling, and it's an art more than science, and it comes with time. And nobody's perfect at it, honestly speaking, but there are some founders who are just so good at it that even a lot of big new VC firms actually invest based on that vision. Obviously, there's diligence around domain and you need all the engineering talent, but that's not enough, is the point.
It's called charisma.
I sort of agree with you guys.
But not really.
But not really. No. I mean, in terms of how do you successfully build a company, right? And so there's a lot of emphasis on team, right, and charisma and all that. But I think I'm a little closer. I think I'm a little closer to Sanjit, but almost, which is to say, yeah, team's important, but it's impossible to really assess teams. I mean, I just again, within our firm, you'll get people who fall in love with the team and people who are suspicious of the team. And, so it's just really hard to get consensus around team. I mean, now in retrospect, I look at my successful entrepreneurs and I said, of course, right? But boy, it's really hard to, cut and paste, right? Because every team is going to be different and they're going to have, and so, you can't sort of figure out, okay, you're going to be the domain expert and you're going to be the storyteller and you're going to be the finance expert and you're going to be the pessimist. I mean, you can't necessarily, sort of assign those roles. It's going to be really, really, really tough. But what you do have to have, what I think you do have to have, you've got to figure out, what sort of unfair advantage you have. And this is back to, it's partially domain expertise. It's partially, but that's not good enough. In fact, the smartest people about domains are the least likely to be successful innovating in that domain because they just know too much. So now there are a few people who have this crazy ability that you generally associate with Steve Jobs, which is the ability to look at wildly different domains, know enough about, software, know enough about hardware, know enough about calligraphy, know enough about touchscreens that you can sort of put things together in a way that nobody's put things together before. And with all due respect to engineers, it's not necessarily the way you were trained to solve problems, right? Engineers were trained to solve problems, and it's a very disciplined, beautiful, wonderful skill. But most successful companies are not companies that solve problems. Most successful companies are not companies that solve problems. They're companies that exploit new opportunities. What problem did Facebook solve? What problem did Apple solve? What problem did Google solve? Right? They didn't solve problems.
A lot of problems.
No, but you know what, Bill?
They didn't solve problems.
Hey. What? Last year I gave a talk, thanks to our friend Rob, on the state of Gen AI, and I put a slide back in year 2000. Search looked like this. I had 5 search engines, Alta Vista, Yahoo, blah, 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 blah. and then Google came. It did solve a problem.
It was
I don't think you're seeing it.
I remember exactly. It was Google was hot because they played the game brilliantly. They played the game brilliantly. They said
Facebook also solved a problem.
No.
I wanted to connect with people, with
so
friends.
why didn't you do
and
Friendster?
The Friendster, MySpace. I had accounts with.
Okay, guys, we don't need to have fisticuffs here. Break it up. But I got to ask a follow-up question. I mean, you're actually the first person that said this, and I mean, maybe you're a contrarian in a panel because I've been to like tons of pitch competitions and whatever, and everybody says the same thing. What's the problem? What's the pain point? What's your solution? How do you execute? So you're saying we don't care about the problem? I mean, that's new.
No, what I'm saying is it's not the only way to create something useful. Okay. And what you see out there that, have been most dramatically successful are not, we need a better search engine. No, what Google saw was that these idiots, they're ranking pages based on the popularity. But, at Stanford, we scholars, that's not how we rank pages. We rank articles based on citations. Right. That's an obvious solution to, improving search for the web. And so the PageRank algorithm got a patent of all. It was obvious if you were a scholar. It was not obvious if you were an engineer. And so the USPTO gave him a frickin' patent for something that was obvious. And that was an important distinction that separated him from all these other from all these other search engines.
So let me ask you a follow-up question, if I could. I mean, since we were talking about low barrier to entry, because it's so easy to create these AI businesses. In the old days, there was more emphasis on getting patents, right? It's really hard to get AI patents. So what is what do you look for in competitive advantage? I know you said it's not domain expertise necessarily. Although, I mean, I've seen in a lot of the recent deals, these domain experts are commanding huge, premiums. And so what is it like?
No, I think it's what Ryan, it's lock-in. You got to figure out a way to get lock-in. I think that's, Ryan, you made that point, right? Yeah. I mean, you got it. That's, I think, in AI where everybody has the same set of tools.
Right.
Right? You got to have a business model and or a technology that creates lock-in for what you do.
Without the IP behind it. I mean, the protection behind it, right?
There's very few companies now that will actually, even if they're on the hardware side, I mean, there's a couple industries in the healthcare that will publish their IP. They don't want to put patents out there because then everyone knows right away.
Right.
And so SpaceX they're not. I mean, they've innovated like crazy, but they're not putting that out into the public. So sometimes it's just trade secrets, and a lot of time, data lock-in, network effects if it's consumer. Sometimes on the business side too, but those are generally what keep customers there and make you defensible.
I think business to B2B is different from B2C. I totally, regarding the Facebook example, I think it's very hard. There was in my opinion, there was no problem per se, but there's a consumer trend like TikTok. Why did TikTok become popular? You could you could do reels and all that, but TikTok made it really popular by making those short form and understanding your preferences. So B2C is completely different from B2B. In B2B, there are certain problems if you can find a novel way of addressing those problems and then creating a lock-in that gives you a sustainable advantage. B2C, I don't do B2C. I don't understand consumer trends, but somebody who does, I think that's a whole different ballgame.
It reminds me, Anshu's comment reminds me, and it's true for both B2B and B2C. Andy Grove, the co-founder of Intel, used to say, for any piece of technology to become massively popular, some figure of merit has to improve by 10x. It may not be an obvious problem that is being solved, but the figure of merit that Facebook improved or TikTok improved or Google improved was more than 10x. Access to information, access to my friends, access to this, or access or video-based reels, etc. So as an entrepreneur, something to think about is if I'm starting a company today, which figure of merit am I improving by 10x? Is it cost? Is it convenience? Is it access? Is it something else? If you cannot answer that question, then why bother to start the company? Otherwise, you will be a yet another incremental company improving by 10% instead of 10x. And you may get initial funding based on either your pedigree or your storytelling, etc. So you will not sustain, almost guaranteed. And the reality is, in Silicon Valley, there are too many of those companies. They do exist. It's not hard to find those examples. They do get funding, seed, Series A, but not after that, because cracks show up, cracks surface up. And the other thing to think about is there is a plateau, and the plateau has changed. The numbers have changed in every phase of startup evolution, but there used to be a plateau at 1 million ARR, which means I have my early customers. If I am a B2B company, I'm selling 100K, maybe I have 10 customers, or I have 5 customers, 200K each. ARR, I've reached 1 million. All right, I feel happy. Doesn't mean I have product market fit, remember. Next barrier, next plateau comes at 5 million ARR. A lot of companies stall around that. And then after that, you cross that plateau, the next is 25. So there have been these established plateaus based on data, and the numbers have evolved also. In AI, it may be different numbers, 10 million, 100 million, 1 billion, whatever. But there are plateaus to be aware of in terms of product market fit and a recurring use case that you are solving. There was a company we had invested in 10 plus years ago. Their initial customers were Netflix and Apple. First 2 customers. I was so happy. The CEO was happy, board was happy, all VCs were happy, everybody. They were paying, I forget the numbers, less than $1 million each. They could never get a customer after that because those 2 customers were asking for so much customization. The use case, the product could not be applicable to other customers beyond Netflix and Apple. So it's very hard to build a sustainable and recurring use case company that sustains over a period of 10, 20 years. It's very hard to build. Disclaimer, I'm an investor in Palantir when it was private. But look at that company. You know how old is the company? 20 plus years. They've gone through plateaus. They've gone through phases. Some good, some not so good. But they kept evolving in every phase. You should look at it, how that company was built. I know it's in the news now. That's why I'm picking that company, because their stock is rocketing. But that's not the point. You should look at the journey for the past 20 years.
Did you want to say?
I was just I strongly agree with Sanjit, and I wanted, and so Anshu, you were, on the B2B versus B2C thing, and I'm thinking, no, it applies to B2B as well. So TSMC, what intellectual property did TSMC have? What problem did they solve? It was purely opportunistic, right? They said, everybody else is trying to do merchant and, internal. And what if we become a pure, merchant fab or whatever? And it was a pure business model. They didn't know how to, they didn't have the machines that Lam had. Lam should have done it. Maybe, I don't know. but again, it was an opportunity. Yes, you can look back and say, no, it was solving a problem. But if I wanted to be a fabless chip company, there were other places. I could go to Intel, I could go to IBM, I could go to some other places to get my chip made, but I'd have to stand in line, and I'd have to, I wasn't a priority, I was a second. And TSMC said, we're going to make you guys my priority. Is that fair? I don't know.
Yeah, no, that's very fair.
Absolutely. I mean, look at NVIDIA. NVIDIA is a 30-year-old startup.
Yeah.
Okay. So there are definitely examples of those opportunities. And I think you have to either you have to have a keen eye, or I think you have to get lucky. so it's both the things I think here. But I mean, the reason why I was saying we don't do B2C is because B2C is so much driven by trends that you really cannot predict. But some people have a keen eye on that.
So as we kind of round to the end of the hour here, from what I hear, it sounds like, build a sustainable business, be opportunistic, right? Not necessarily solve a problem, but just find some opportunity and then seize it. You got to have a competitive advantage to combat the low barrier to entry, which is to teams, the stickiness. Is there something else that a founder should consider?
A founder should manage his or her time very wisely.
Okay.
The founder spends 100% of the time on building the company and 100% of the time on fundraising.
Wait, that's 200%.
Yes.
Nice. Right. Yes, I guess.
It's
cloning, right?
It's hard being a founder.
Yeah.
And that's a skill that all founders have to learn and evolve. As the company evolves, how is the founder as a person evolving as well? I gave time management as one example, but that's just one part of it. As a leader, as somebody your employees can look up to. And some companies, I'll give example of, since I know the CEO, Dheeraj Pandey, he created co-founder and CEO of Nutanix. Nutanix is valued roughly $20 billion in public market today. He co-founded it, and the company went public from day one to IPO 7 years. One of the fastest growing enterprise stories. But he talks about it, how he had to grow as the company grew to whatever, it had roughly, let's say, 1,000 employees. From 3 founders to 1,000 in 6 years. So you have to grow, and they were selling across geos, not just in the US. And he said, my job changed from, after first 2 years, from actually selling myself to trusting the head of Asia, head of Europe, head of this, and just going with them to help close the deal versus actually doing it and having how to up-level them. Said it was an art. The other thing he talks about is how do you look at the company as a full human body? Every part of the body has to move in the right direction, in the same direction. If they start going in 10 different directions, what will happen to the company? This is actually a Harvard professor's point. How do you drive an organization together as one body, parts of the human body? So that there are a lot of such theoretical concepts, but they come into action and they start limiting the growth of the company because the founder himself or herself has not evolved. Either they stay hands-on, like the first days of the company when there were 5 employees only, or they are still doing certain things in the old manner. So that's another limitation.
One thing, since I've run my own companies, I think one thing that is easy to forget is cash is still the king. So just manage cash properly, because you never know. Pandemic hit. I hadn't even launched my product and pandemic hit. It's raised the greatest uncertainty at that time. And, it was very clear the term sheets were taken back for many of the companies that were trying to raise at that time. So just be mindful of the cash. Don't grow. Grow responsibly, I would say.
I think there's a lot of value to founders in having sparring partners and diverse opinions, whether it's on the founding team or amongst advisors, and a willingness to listen to them. I am leery of founding teams that are too homogenous. Groupthink is a real problem, and you need to be able to be challenged, be willing to listen to alternative viewpoints, and use the constructive conflict to come up with better solutions to advance your product and advance your business. And so it's not a bad thing to found a company with a close colleague. I did that in my first company, and I think we suffered from that homogeneity and could have used a more diverse team, especially intellectually. But try to find alternative viewpoints that can help you vet ideas and develop your product and your business more efficiently.
Ryan, I think you wanted to.
Yeah, and something else I think is really important is just like pure execution speed and iteration speed. I think the Chinese actually do this really well. I think Dongyun's like a really good example where they just were like, hey, we're going to try 100 different things. And this is TikTok is what stuck. And then they just ran with it. And so I think sometimes if you have we've seen a couple portfolio companies that, they had really great technology where like, I'm not sure what the application is. We're going to try everything. Found really great product market fit after failing 99 times and just ran and really took off from there. So if you can execute really quickly and fail really quickly, figure out what works, then I think that can give you an advantage as well.
Excellent. Jay, you want to close this out?
Sure. Luck.
What about charm? All right. Okay.
One
last thing. Okay.
Okay, if I may, just
absolutely. Rob, I don't see Rob. We can keep going.
Okay. Oh, is he? He's given up on us. He's given up on us. No, it's credibility. Credibility, and we long ago and far away we created a little video called "The Top 10 Lies of Entrepreneurs," and the point of it is that there is a tendency for entrepreneurs to exaggerate. So you got to be really careful to make sure that you've got something substantive that proves that you are valid. So at every step along the way, you've got to find out what are those things, and maybe it's a advisor, maybe it's an investor, maybe it's a customer, maybe it's a part, whatever. But before you have revenues, you still have to prove that you've got something valid, but you can't exaggerate. You can't, and most entrepreneurs, they talk about what they think is going to happen soon, and it turns out that it never does, and it destroys your credibility. And so, figure out a way to, show high confidence, but tell the truth about exactly what you have achieved. You don't have to tell the whole truth, okay? But tell the truth well. So that's one other tip.
Oh, that's awesome. That's really good. So fake it till you make it doesn't work anymore, right? Okay. All right. We were closing right on time, Rob. So,
Well, on that note, let's give it up for our panel. So, panelists, how do you want to be contacted by the audience? Do you want to be contacted by the Bill?
I'm pretty easy to find, but it's hard to get me to respond on a timely basis.
That's for sure.
But no, I'm Bill at PegasusTechVentures.com. Or you can find me on LinkedIn, but whatever. I'm pretty easy to find, but make sure that you show something in the first 2 lines that is going to make me, excited.
Charisma and credibility.
Bill,
opportunity, right?
Bill is a typical VC. Make sure the first 2 lines count.
Sanjit.
You can send me an email, Sanjit at ufirstcapital.com, letter U, firstcapital.com, or connect on LinkedIn. If you search with my first name, last name, there are 2 LinkedIn accounts that come up. Both are mine. The first one is full. That's why I created the second one. So look for the second one.
Ryan.
Yeah.
Yeah, well, there you go.
For me, LinkedIn or Ryan T at fusionfund.com.
Anish.
So for me, Anshu at converge.vc.
Ben.Haskell at lamresearch.com.
Ajay at ajay.net, but only reach out if you have like a 100x idea.
That's right.
Not a 10x is not enough.
Eli, do you want to be contacted?
Don't call me. No, just kidding. No, I'm very easy to find. Mansour at swlaw.com.
Well, Snell and Wilmer will be contacting you anyway, so. If you want to contact me, talk to Melissa. Email only. So now it's time for audience participation. So if you have a question for our panel, step right up. We have a line right here. It's going to be very organized. This is not a pitch event, so please do not deliver a pitch, Bert. If you deliver a pitch or a thinly disguised pitch, you have to deal with Melissa, our bouncer. First question, Bert.
Yeah, Bert Rank with Infineal. Anshu, you mentioned something very heart-touching. You actually loved your VC. You don't hear this very often behind the scenes. I'm sorry. But can you really share that story? What made you fall in love with your VC that you joined them? What are the qualities? We talked charisma, about founder qualities. Let's talk about VC qualities that we should look out for.
So the quality that I really liked in the VC, I've been through 5 acquisitions, and you can see investor colors in acquisition. Okay, and in the last acquisition, what I really liked was I wanted to vest my employees 100%. Okay, because my company was acquired within 3 years, and most of my employees were less than 1 year. And these are the employees, because at that time I wasn't thinking I would go to the dark side. I was thinking I'm going to go start another company. All right. And I will need my employees because these have been either they were with me in my past life, or I like them enough that I wanted them to continue with me in my next journey. And that's not it. But I mean, they had worked really hard, and I wanted them to take, we were all benefiting. They should have benefit also. But, the Converge was the real VC who really fully, wholeheartedly supported me in this. Okay. And at that, most of the time, investor and the other interests are not aligned during this time because, all the money gets distributed in who all is vested. So that alignment, in my opinion, was very, very important. That support was very, very important. And the advice I got, I mean, we hit road bumps. Like most companies, we hit pandemic, and we didn't know what to do. We didn't launch our product. We wanted connections. They were my first call because they responded all the time. They gave me time as if they were part of my company. So those were the things you kind of build trust with them, and then that's the reason I joined.
Hi, everybody. My name is Will Taylor. I'm a founder coming over here from London. On the topic of opportunistic sort of businesses, obviously, traditionally, you have these founders who have this domain knowledge and they've got some insight no one really has yet. And they go and capitalize on that and become the leader in that space, and then hopefully hold on for dear life while people try and copy them. What is your view if you actually do a lot of research, you realize there is a company that's already doing something, they're growing like hotcakes, but that's going to be a really, really big market, and actually being a fast follower and maybe differentiating yourself along some sort of key axis means that you could build a pretty good business there as well. What's your take as a VC if you've seen these?
I mean, we're looking at a company right now that's doing that. They're in a I wouldn't say it's saturated, but there's quite a couple competitors. But the market's big enough where you could have like 4 or 5 unicorns on the space. And it's really a land grab. There's defensibility. Once you get a customer, you're pretty locked in. And so we're like, you have the product already, you got product market fit, here's a bunch of money, and just get as many customers as you can and run as fast as you can. That's a scenario, but curious if anyone else has seen this before.
Yeah, I mean, it's one of the top 10 entrepreneur lies where we've got the first mover advantage, right? There is no first mover advantage, right? And so, can anybody name a first mover that is a successful company that we're aware of right now? One possible exception is Intel. But none of the other companies that are famous are first movers. And so back to Sanjit's point, though, if you're going to be a fast follower, you better know the playbook, take what's right, and be 10x better than they are. You can't just be another one. I mean, and so yes, there may be room, but you better be differentiated from those other guys, because it's going to be really hard to raise money if you're just saying, oh, no, there's plenty of room. That's not going to work.
Hi, everyone. My name is Saf. I go to the University of Southern California, USC, getting my master's in analytics and AI. And I'm currently building a platform around AI nutrition. One of my biggest passions is nutrition. And Bill, you were talking about this, and I know some of you guys were talking about this as well. But credibility is a huge thing as a founder, right? That's what differentiates a company, its founder, and its credibility. So what advice do you guys have for a founder to build their own brand and to enhance credibility, whether that means building their own brand on social media like LinkedIn or gaining certificates? Like, what should I do to build my brand and to gain credibility?
Yeah, I don't think it's about social media. I mean, it's going to be, it's closer to where Michael was earlier, which is to say, it's what do other people say about you? It's not, how many followers you have. And well, depending on what business you're in, maybe. Okay. Having 3 million followers can be great if you're doing consumer. So I don't discount that. But, in terms of credibility, if you don't have a brand, you surround yourself with people who, if in terms of the VC world, we think are credible, are clearly credible. In terms of your customer world, your customers think are very credible. And that, that halo effect is the best way you're going to get there. Does that make sense? I mean, you can spend some time on social media, but don't think that gives you credibility.
I think words don't matter, actions do. So what you do, how you build credibility with your employees, with customers, partners, investors, that whole ecosystem, it comes down to the actions and how you support. I think Anshu gave a very good example. At the time of exit, do I want to recapitalize the company to take care of the employees who have worked so hard? They may not have earned up all the options. That's an action. That builds credibility. If I am an employee working for Anshu in that company at the time of exit, hey, I'm going to go to her. When are you starting your next company? No, I'm serious, right?
No,
that's what happens. People work for people. There's a credibility bridge that people want to build.
I think it's worth giving thought to your go-to-market strategy in conjunction with trying to answer the credibility question. For example, are you going to try to sell a product to dietitians who are then going to work with patients? Or are you going to try to mass market to consumers with an app? Or are you going to sell to universities that are doing studies on nutrition? And the go-to-market path can influence how you need to build that credibility. And maybe it starts with partnering with the university to do a study using your app or to get data. Maybe it ends up being much more of a social approach where you need influencers that are active in nutrition. But it's really going to depend on what that business model ends up being and that go-to-market strategy.
Fantastic. Thank you, guys. It's helpful.
Hi there. My name is Arca, and there was something Ryan said that got my attention, and I want to ask you guys about. So I am the CTO and co-founder of a B2B SaaS that is essentially a wrapper over foundation models, like a lot of companies in the AI space. Something that is worrying is having to explain to investors how the foundation model labs, the big AI labs, are not going to eat my lunch down in the application layer. What can we do as co-founders of these AI companies that are effectively wrapping around LLM APIs or other generative AI APIs, that our lunch is not going to be eaten by the foundation models that are reaching down into the application layer? I mean, people joke every time there's a big release, like 20 different startups go out of business. What do we do? What you kind of alluded to the answer about, like, working with customers and their data closely, Ryan, but what else can we do?
In your domain, we have actually been trying to form a thesis around LLMs and the vertical applications. We do think LLM is getting commoditized. We do believe, despite all the valuation hype. There is, if you look at the latest releases, there is actually hardly any difference between what Anthropic is releasing versus what OpenAI is releasing versus what XAI is releasing. LLM is getting commoditized, and customers will use one and then switch, and so they're interchangeable. They're almost there. Maybe one leapfrogs, but then other will catch up. We'll see that. For you as a startup, it's actually a very good time to build on top of the LLM because that stack is up for grabs right now. That whole vertical stack of whether it is apps or agentic AI, or whether it is going to be a horizontal platform, a platform that actually enables others to build agents, that stack is totally TBD right now. And that's the next wave of innovation. We are seeing some early example. There's a company called Harvey AI that does legal really well. There's a company called Cursor, actually a company called Anysphere, which has a product called Cursor for coding. They're growing, but these are very verticalized niche solutions. For a startup entering that part of the stack today, there is a whole opportunity, I feel. People will call you, oh, are you a rapper? Are you this? Or you don't have an LLM? Stupid questions. I think those are still people who are 2.5 years behind before GPT was released. And by the way, you started by saying you run a B2B SaaS company. I would not use the word SaaS. SaaS is dead. Like it or not. SaaS, the way we know, SaaS applications are changing. My interface point is not going to be the apps. I don't think in 2 years I'll have apps on the phone. I'll be talking to an agent and it'll do all my work. I'll just say, hey, go to my bank app or credit card app, look at the transaction, update the Excel sheet, send an email to the CEO and update this and make sure there is enough cash for the next month. That's across 5 apps. I did not go to the apps. I don't think you will need the apps. If the user doesn't have to go to the apps, why do you need the apps? App is just the interface point. Let the agent just directly talk to the data, talk to the infrastructure. So think about what to build. That stack is evolving. It's up for grabs, like I said.
I think it's a great question because you're right. OpenAI demo day, lots of startups get killed. So don't operate near the black hole of OpenAI. Okay, that would be one advice. So if you are operating, say you were in CodeGen, okay, CodeGen is although Cursor is like the leader of CodeGen, when sort of got acquired, Google is going to enter into CodeGen or whatever is going to happen, don't know. But what I'm trying to say is it's just one of those contested spaces. And then anything to do with CodeGen, which is code review or PR reviews or all of these are they are technologies that are going to be absorbed in one solution because no enterprise is going to say, I'm going to use this for code review. I'm going to use this for CodeGen. I'm going to use this for PR to ticket. I'm going to use this for something else. The SDLC cycle, it is going to join and enterprises are going to deploy one solution. Okay. So you choose your domain very carefully. What I'm suggesting is you should have a very unique advantage that this cannot be eaten. And if you talk to, say, people in Google and all, like Claude, Anthropic released Claude for financial. Okay, you would think that the AI companies in fintech domain, they should be really worried, and I think they should be. But the fact is, they're going to do 80%. They are going to handle the least common denominator because they are an operating system company. LLMs are the new operating system, so they are going to do that. But if you go into the complex workflows of financial institutions, they are very different. These companies hopefully, they're not going to go all the way into their financial institutions and figure out this is how things are done. So choose that domain and choose your problem or choose the workflow or whatever you are doing for the company, which is complex and cannot be, then these large model provider companies are not going to get into that because they cannot handle it 100%.
Thank you.
Thanks for doing this. This has been really great. So I've been involved in startups for a long time, either some of my own and I worked for others. And I remember a day when, based on a prototype I wrote over a week or two, we could close a Series A for $4 million. And now we have great inflation. So now you have seed and pre-seed, and maybe there's something before that. And the question is, what is the threshold these days of what I have to deliver before I can get, I suppose, pre-seed? Do I have to have the product written and customers? And most important to me, what if the idea involves manufacturing so that there's hard costs involved in going to market?
So we invest in a lot of hardware because our corporate partners frequently are interested in hardware, robots, devices, things like that. And so, yeah, it is very challenging when you are starting up to be able to prototype a new robot in your garage and, take it out and raise, some capital for it. So you've generally got to come from somewhere. Well, okay, if you're hardware, you generally have to come from somewhere where we have a base that you're starting from that gives you some core basic credibility you're building on. That's a pathway you can go down. But in general, your very generic question in terms of it varies tremendously. We spun a company out of a university, right? Based upon 18 years of university research, right? And, a couple of guys from the lab and a guy they brought in the CEO. So, but, they in essence had zero traction other than the fact that, the lab had won a Nobel Prize for this particular molecule, right? So you've got to have some basis of credibility that is going to enable people to say, I believe that they have something unique that they can execute on. And if I give them some reasonable amount of money, or maybe it's an unreasonable amount of money, and we're seeing that all day, right? That they're going to get to this inflection point that's going to give me, a 5x step up. And so that's, again, getting into the mind of the investor. Do I see a pathway for putting enough money in today that I'm going to get a 5x step up, in some reasonable amount of time? So you've got to think about what we consider to be, our metrics, and then have the proof of credibility to get people to actually write a check.
So 5x would be reasonable for that first step.
We typically it's 2x, but we'd like to see 5x, right? We'd like to see 10x, but we know it's not going to be. We know it's not going to be, but we want to be able to pencil that out.
Yeah. And then also on that front, I think it depends. Yes, if you have a lab that won a Nobel Peace Prize, that's fantastic. You don't have that generally at the hardware stage. What we've seen, especially if you're really early in your pre-seed, sometimes just some really strong POCs or customers that have said, hey, if you built this for me, we'd be willing to buy it, that have high credibility. And so that sometimes if you get a number of those reference calls going and you have strong credibility in the space, funds will be willing to give you some initial startup capital for that.
Great.
Hello, everyone. I'm Jason. I've been in the Bay Area for 1 year after graduating from the University of Oxford. Got to build some credentials first. So I have been developing a Minecraft server for the past 10 years. So with my game development experience, I am now looking into the area of looking to take advantage of the benefits of AI coding tools to build a new startup called BlockPlace that aims to be the new Roblox for the AI era. So I have a question to Ajay. So when you describe the best founders that you have, the best qualities that you would want in a founder, you specifically mentioned the word ethical, something along the lines of very, very ethical or extremely ethical. So I kind of wanted to ask for some I want to say clarification, but like especially what do you think the benefits are of like an ethical founder to the development of the company, and like kind of what kind of ethical are you mostly like talking about? As in like being ethical to employees, being ethical to the customers, following like a social benefit vision very closely, etc.
Yeah, absolutely. Well, out of one of my venture capital funds that we staked, it's called Happiness Ventures, and we specifically look for founders with this happiness mindset. They are not only they're kind of inverting the pyramid where the employee is at the top. They focus on really creating a lot of value around the employee, and then the employee then ends up having a service mentality, serving the customer, serving the market. So there's a lot of ways to tackle that, but yeah, that's a big part of what we're looking for out of that fund is kind of the mindset of the founder. But I think Roblox for the AI age is interesting. Make it a playable content experience where you can create and play at the same time. I don't know if you've seen Showrunner, but I was thinking make a Showrunner type of Roblox experience. That'd be pretty interesting.
Do a demo when you do pitch to either customers or to investors. You do a demo. Start with that.
The idea is to build new person shooter game first, which is very accessible, runs on the browser, free to everyone, actually very ethical as well. And the long term, yes, that's why I was interested. The long term idea,
first person shooter. Okay, yeah, that's awesome. I love that. I want to learn more already.
Shooting backseat. Well, not about the gameplay content. It's mostly about like being very consumer friendly to the players. And the long-term goal is to convert these consumers into volunteers that build code in our platform using generative AI tools. And our bet is that generative AI tools will make it possible, so like newly possible to make the to let these volunteers working full-time to create compelling games. So now you have a benefit of the volunteers making like open source code and training our AI models, which the Roblox and the other game platforms never will have. Yeah, but
it's intriguing. I like it already.
I mean, I guess my question about the ethics, I also kind of wanted to get your opinion about like kind of the latest thing that has the event with Meta trying to poach the employees from all of the other frontier AI labs.
Why don't we chat about it offline? Because I know there are a bunch of other people that are asking questions.
Yeah, we've got 3 minutes left for questions. So.
3 minutes to go.
Hi, I'm Sue. I'm building a AI-powered marketing tool, like B2B SaaS. My question is for these early stage investors, because my issue right now is I'm like, idea behind the brain behind this product. I'm not technical. I'm like front end, I can build, but like back end and coding, I need a co-founder, and my current co-founder is in Waterloo, which is like a MIT of Canada, if any of you know. So, but I'm looking for a new co-founder, but like for you guys as an investor, how much I know you guys talk about the team, and I think YC also really look at the team, like some of the YC cohort that won last round, the products are not that, and they were kind of underwhelming. So in my mind, I'm like, my product's a little bit better than that, but like they looked at it like you're ex-Google, ex-Stanford and stuff. So how important it is for you guys to have a technical founder if it's a tech startup? So that's the kind of, I will have a CTO obviously, but it's not like if I hire them if they join after I get the funding, I don't consider them as a founding member, like employees. So
Sam Altman is not a technical guy.
Who?
Sam Altman.
Oh, really?
Is not a technical guy. There are a lot of examples of successful CEOs.
Yeah.
That wasn't a startup, but that was a nonprofit. I think right now, if you execute fast, you vibe code and vibe prompt your way to a good app, get to revenue, it probably matters a lot less today than it did a few years ago.
Right.
So, that's the beauty of the kind of age that we're living in. So execute fast, get to 10 million in ARR in 6
the
months,
prototypes
knowing
roll in.
care.
Yeah. Okay. Sounds good. Thank you.
Well, no. I mean, I don't want to be, a downer, but but seriously, why can't you find a technical co-founder? I mean, the way you describe it, it sounds like you do need a technical co-founder. I mean, it would be great if you didn't, but
Not necessarily. It's
Okay.
like founder versus just a CTO. Those are two different roles, right? Like founder as in like someone who's go do the battle with me before investor invest in it while I'm bootstrapping. Right now I'm bootstrapping. So like
Okay.
if I were to pay someone like he'd be my CTO, they will, and then we can build the company. What I meant is if I were to have the product launched already and a few customers in place, but I do need to go talk to investors, which is could be a full-time thing, right? As a founder, and I need someone in the background to be building it. And if I were to go to the investor, like, hey, I have a CTO or I have a software engineers who build in that, if they were to ask, then I can have it. But like, if they were to ask, do you have a technical founder, like, co-founder? Is it important thing or not? That's
So the flip side of it is, my personal bias is I'm worried a little bit about the way you're defining this other person. Why wouldn't you have the next 5 people who come into the company be co-founders?
Yeah.
Why not? Elon Musk did not found Tesla, but he's called a co-founder, right?
Yeah.
So why wouldn't you call critical people who you are bonded together with? Why wouldn't you call them a
yeah,
co-founder?
that was my previous founder, but she saw me going to these events and grinding after work and stuff. So she's like, I'm out. I'm not. This is not my life. I just want to collect paycheck kind of thing. So
Okay, that is, obviously the wrong person. Obviously the wrong person. You've got to find someone who is equally willing to live and breathe
Right,
what you're
yeah,
doing.
yeah.
But it's hard for us to get excited about someone who can't find other people who want to live and breathe.
But in her support, we are actually entering a different era of startup creation. I do believe that there will be billion-dollar valued companies with 5 employees, maybe lesser. I think we need to rethink. We as VCs and as
They will all be
they don't have to be, no.
Right.
They don't even. We're talking about titles. Then my point is, if she has a product vision and she can execute, to Ryan's point earlier and others, just get going.
Yeah.
I think there is more reception today than ever for a very small team but going big. So you should definitely latch on to that idea that is floating around.
Yeah, versus worrying about having a technical.
Yeah,
that was my question. It's not. I'm not saying I a technical co-founder. I'm saying like is it important for investors to look at this company?
It used to be, but not all investors have probably changed their mindset either. But it is changing. It's work in motion.
I would worry less about the titles and more about the the expertise and the fit within the team.
Yeah.
If ever employee number 2 is fine not being a co-founder, but has the skill set and has the right mentality to support the company, so what?
Yeah.
Don't sweat that kind of stuff. And if someone really wants to be a co-founder and they can bring that value, then maybe even if it comes later, it change that title, right?
Cool.
Yeah.
Thank you.
I would find a co-founder, not just because of fundraising. I think it makes your journey even better.
Right. Yeah.
I do think you need to complement your skill set, because as a CEO you have dozens of things to do also. So it's always good to have a co-founder.
Right.
It's a lonely job. Okay, don't make it lonelier. So I would go find a co-founder.
Thank you.
My name is Gregory, founder of a fintech tool. But before I get to my question, I want to thank you all for being here because I heard $1 million check size. I heard a 10x payoff. There's 6 on the panel. So my value tonight is anywhere from $1 million to $50 million. And I want the audience to think about that. The value that they bring in their insights and guidance is amazing. So my question is, I'm going to be targeting September to do my fundraising start. When should I start reaching out to you as I target that, internal schedules, et cetera, that are coming in?
You know, if you go to a VC thinking like this, you will rarely get funding. You go to a VC looking for money, you will get advice. If you go to a VC looking for advice, you will get funding. You need to rethink about your fundraising strategy. If you're thinking, hey, I need to raise my seed round in September, so this is August, my pitch deck, etc., rehearse everything, and then I start going, and by October end, I'm done. Sorry, won't happen. Likely won't happen. Anything can happen, but likely won't happen. VC fundraising is, somebody said this, I forget who said, credibility building exercise, number 1. Number 2, don't go to them. Flip the tables. VCs are smart. They'll meet 99 companies and then they fund the 100th.
Make sure you never are.
Right? You need to make sure where you are. Are you teaching VCs? Where do they learn from? They learn from entrepreneurs. So they're learning from 99, and then they say, this one makes sense. So you go to them and say, no, I'm not looking for funding. Well, think about funding. Still thinking about it. Say something like that. But say, I'm looking for advice. Here is what I'm building. What do you think? They're very good at pattern recognition. Keep in mind, they meet, 2 to 5 entrepreneurs a day. So they see a lot. They're very good at pattern recognition. They're not good at orthogonal pattern recognition. Something from the left field. They're not good at that. But they're very good at, like AI pitches, oh my God, VCs are seeing, meeting 2 to 5 a day and probably getting flooded with 20 a day. So they do get to see the market. They have a point of view on the market, which is not out on Gartner, etc. That's very late. Ooh, it's too slow. So go to them for advice. If they like what you're building, they are in the business of funding. You don't even have to ask, right?
Yes.
The money will flow. Yes. Money will chase you, in fact. There are entrepreneurs, we just funded a company, it's out of stealth, funded by Kleiner, Lightspeed, Battery, Westbridge, etc. We funded it as well. Raised $110 million. No product out. Very good team. Almost 100% team. We just catching up with the CEO. We went to his office. The VP of finance was also there. Says, we have at least 45 investors who were waiting to get a meeting to invest. Or they were even ready to invest without a meeting. Be that company.
I will.
Think like that.
All right, well, let's give it up for our panel. Applaud. So now it's time for our raffle. We have a few prizes. Actually, this was from our panelists from our last event on July 23rd. Jacques Minkowski, GP at US Strategies, the market entry strategy, and that's first prize. Ajay, you want to do the honors? Winner is that's a lot of fence.
Prize goes to, hopefully I'm saying this right, Faten.
Faten, Professor Faten at Menlo College. Come on down. Yeah, here's your book.
I have the book.
have it already?
Then he's a guest speaker in my class, FinTech.
You have it already?
Yeah.
Well, you give it to all your sister.
Yeah. Okay, we'll give it to him in.
Actually, Bill, do you want to give out one of your books? I know you don't have it on you, of course, but we can.
I had yes, you like
What's the title of your book again?
how getting to wow, Silicon Valley pitch secrets for entrepreneur.
Right. Bill, why don't you do the honors? So this is for Bill's book, Getting to Wow. Hopefully Bill will actually give it to you. He doesn't have it with him tonight. Suspense.
Sounds bad. This is for tomorrow. And the answer is
The winner.
The winner is Hashim Maud. Hashim Maud.
On once, on twice, gone. You must be present to win. Next.
Company name. Okay.
Doesn't matter. They're not here.
Must be present to win.
Snooze, you lose.
Okay.
Drum roll, please.
Ravi Jayasena.
Come on now. So, why don't you get a picture of Bill? Get a picture of Bill. I'll make sure he sends it to you.
On digital or do you want print? You want a digital version? Okay.
I'll send an email to you.
You will.
I'm organized. You're not. So.
My pleasure. It's hard to sign the digital.
Right. Is candy. Next prize is a box of Steve's candy. Anshu, you want to do the honors? The winner is
Simona Ortiz.
Jimena. It's Jay. Menlo College is cleaning up tonight. One picture with Yana. Okay, so now it's time for the grand prize, a $25 Visa card.
Can I offer another prize?
What's your other prize?
A ticket to the grand finale of Star Wars. Yeah, that is a wow.
That's
okay, that's great.
So the next grand prize is a $25 Visa card. So someone's going to get funded tonight to the tune of $25. Ben, you want to do the honors? There is.
Okay. Who are? I'm sorry. I'm having a little trouble reading the.
Spell it.
Oh, see. Oh, it's Chu Hua. Ding. It looks like. So that's.
Come on down. Shuhan Ding. Okay. AC Futures. All right. Get a picture with Melissa, our sponsor.
Thank you.
Okay, so Bill has the grandest prize of all. What is your prize, Bill?
So my prize is a free ticket to the grand finale of Startup World Cup on October 17th in San Francisco. So I see some heads nodding. I wish you all know about Startup World Cup, which has now become the biggest pitch competition on the planet. This year, we're going to do over 100 regional competitions. The regional winners come to San Francisco in October to compete for a $1 million grand prize. So we're going to get 3,000 plus people in the grand ballroom of the Hilton Union Square on October 17th. The morning is a conference with tech luminaries, and the afternoon is the competition. So the ticket prize, the ticket is worth $450. I think you know as well as I. Okay, whatever. But it's worth way more than the $450 that we charge. So I want to make sure that whoever wins this prize, drum roll, you ready? Okay, and the winner of the free ticket is Janet Joe. Okay. Were you aching to come to the grand finale anyway?
I will make myself available.
Oh. Okay. And you'll give me her contact information.
I'll do a
You'll do it. Okay, great.
picture with Bill.
Okay.
Okay, so that's it for raffle. So let's give it up for our panel once again. Sanjit, you want to do another selfie? Sanjit is the selfie king of Silicon Valley, if you didn't know. You can do it in panel and the audience. It's your last chance. You forgot last time.
Okay, we'll do one maybe panel and then one with you.
Go ahead. Hurry up.
Okay.
Work-life balance.
Yeah, you have to go on this seat. Okay. All right. I'll switch. Okay. All right, everybody. We're ready. Good. Good. Good.
He likes doing selfies. You want to do it with the audience?
Do one.
Go ahead.
Listen, you selfie the audience.
That's why it's called a selfie, yes.
Okay, everybody smile. Okay,
everybody one.
Let's hear it for Eli, our awesome moderator. Applause. Let's hear it for Snell and Wilmer and all our sponsors. Applause. Let's hear it for our event team and our video team. Applause. Let's hear it for our audience. Applause.
Let's hear for Rob Lau.
Let's hear for
Applause.
So normally at the typical law firm, I'd say we need to leave the building by 9:30. However, this is Snell and Wilmer, so we can stay here all night. So we have ice cream. We have all kinds of desserts. So enjoy the after party. Thanks for coming. See you next time. Applause.